Welcome back. This is RER Deals of the Week. I'm Ankit.
And I'm Jeff.
We're going to be talking about deals for the week of June 7th to June 14th. So, I'm going to remind you good folks of what our key assumptions are. The key assumptions are 100% of list price, 5% for a 30-year mortgage, insurance is $1,800 a year, 8% of each month's rent is management fee, 1% of purchasing price per year is the maintenance cost, utilities $92 per unit per month. If you're going to lever it, we're looking at a 25% down assumption and a vacancy rate of 9.1%. So those are the key assumptions. Jeff, you got the first deal for them?
Absolutely. Today we got 390 South 10th Street. This is a large new construction 3-family. Surprisingly not an REO, not a short sale. So it's a fair market sale at $295. This one is throwing off great cash flow right now. It's fully rented. It's in good condition. It's a new construction, so you don't have any kind of deferred maintenance to worry about. And you also have very desirable units. You're going to get top dollar in terms of tenant rent. The one key thing to remember here, though, is that these new constructions, when they're all built back in 2005, 6, 7, at the height of the market, they all got 5-year tax abatements on them. So right now, the taxes are artificially low. Once those tax abatements expire, which is going to be going to next year, you're going to have a lot higher taxes. Now, this may or may not be something to be really concerned about because Newark just did last year a revaluation on all of its property. So until you really see what the effect that's going to have, it may be something to watch out for here. But until that time, it's throwing off great cash flow, and this is definitely a buy and hold investment.
What are we looking at in terms of a cap rate in this deal?
As it stands right now, we're looking at about a 13 cap, just under 13 cap, currently rented, so it's not; these are not projected rents either, which is definitely a big plus.
And that's based on, obviously, like he said, the fact that there is no taxes right now in the property, and once the abatement ends, that can impact the cash flow value, but from our side, as of today, it's definitely a deal that's worth looking for a buy and hold, given the facts of new construction, and given the fact that 3 families in the Fairmont section have been trading at roughly, what, like $340 right now?
Yeah, we've seen all the way up to $360 recently.
All the way up to $360, so you're still buying it in the money as well. So it's a good deal from both those perspectives. So hence we wanted to bring this out to you guys as a buy and hold deal. So that was the buy and hold deal. I got a flip deal for you guys. I think this is a good deal to look at. The deal is on 178 Dickerson Street. It's in the northward section of Newark. It's close to 280. It's close to the University Heights section as well. So it's a good looking location. It's a 2-family asset. It's got 4 beds, 2 baths total, and 9 total rooms. So it's not a huge 2-family. It's pretty in pink, as you can tell from the picture. It needs rehab work right now. Based on the pictures and the discussions that we've had with the agents, it looks like it can need anywhere from $48,000 to $60,000, and that's on the high side, with an after-repaired value based on the last 6 months of comps of ranging anywhere from $160,000 to $180,000. So let's do the math here really quickly. If the value is $160,000, you have to pay out, let's say, 6% to 7% in selling costs, about $140,000. We worked our math backwards, so you can earn a potential profit of $33,000 or higher, which is about a 29% return on investment, and our target buy price for this investment would be $40,000. It's listed at $44,200. It's not a big stretch. It's been on the market now for about 30 days plus, and they had a recent price drop from about $55,000 to $44,200. So it's a deal that may be worth looking at, maybe worth investing into. If you got questions, you can always hit us up at deals@rernj.com. So that's our buy and flip deal for the week.
I would also add on that one thing that maybe a potential investment could look at here is the attic finishable. I see that you have kind of a large attic up there and only 2 bedrooms on the second unit.
Yep.
A lot of these houses of that style now have that bonus unit up there, or even 4-bedroom top units, which definitely accrete your rent value much higher.
So it really depends on you as an investor. What's your end strategy? Are you looking at it as a rental? Are you looking at it as a flip? If you're going to add, regardless of which direction you look at it, like Jeff said, I think it's a good value-added proposition of making finished rooms in the attic, so that way you get more bedrooms out of the asset. You will accrete its value. You'll have no problems hitting the $180,000 in valuation that you may be aiming for at the time of the resale. So please take that into consideration when you look at it. So those are deals for the deals of the week from Newark. Unfortunately, Jeff, we took a look at Jersey City.
As usual, we looked at Jersey City also. This week we had 16 deals come on the market, but nothing that I would really call a deal of the week. So unfortunately this week we have nothing from Jersey City.
So Jersey City, there's no deals of the week. Jeff, what's your deal of the week for Newark?
I like this 3-family. New construction, I think long-term is definitely a good play.
I actually second that one. I love the fact that it's a new construction. My only concern is definitely the taxes and what they may go up to, because they rise up to $12,000 to $13,000. That can be a really big concern. But as long as the tax bill stays under 10 and it can be arranged for that, you get a great size, no deferred maintenance, and you're buying it in the money today. So definitely that's a deal of the week from my side as well. This is Ankit.
And I'm Jeff.
This is our deals of the week. I look forward to seeing you guys next week.